Welcome back to Portfolio, everyone. And today we're doing a deep dive into Pfizer. This is one of the biotech companies that is working towards coming up with a vaccine to help solve the pandemic and help save people's lives. So of course, all these companies are in the news right now. There is somewhat like a race to come out with a vaccine, and there's a couple big name companies out there that are actually working and developing different vaccines in order to help save people's lives. So Pfizer's been in the news a lot over the past week because they actually reached a deal where the US ordered 600 million doses of COVID-19 vaccine that could have potentially net Pfizer $15 billion sometime in the future. So this big deal actually brought huge news. The company actually let their share price jump up. So what the actually US agreed to was to pay $1.95 billion for 100 million doses of a vaccine made by Pfizer and BioNTech. So this is one of the government's latest moves to help, solve the pandemic, throw money into the companies that are actually working towards solving and trying to do this as fast as possible in order to come up with a cure to help save people. So this $1.95 billion for 100 million doses is great news, and that actually led Pfizer's share price to jump around 5% the day this was announced. So today we're going to go through Pfizer, break down what we think of the company, if it's a buy right now, and with this large potential, if they are the first to come out with a vaccine, or if they are one of a couple companies to come out with a vaccine, I'm sure there's going to be a large influx of revenue and net income for the company because the vaccine is going to be such high demand across the world. If they're one of the companies that can successfully do that, of course it's going to help save people's lives, but of course there is going to be dollars that flow to the company because of it. And of course we have seen in the news that Pfizer has actually posted positive results from their vaccine so far. Of course, it is nowhere near ready for commercial use just yet, but overall it has seen some good positive results as of now. And earlier this month, the Pfizer CEO actually said that he believes and he's optimistic that the company can have a vaccine out by the fall. If that's actually going to happen, we are still unsure. That's kind of a very fast timeline in order to get it tested and ready for market. But he is optimistic, and he has announced that he believes in an interview that it could be available by the fall towards a decent size of the population. So today we're going to break down Pfizer, go over the company fundamentals and what different analysts are saying about the stock, and determine if right now is the time to buy, just in case they are one of the companies that come out with a vaccine and they may see some nice upside potential in the next 12 to 16 months. So everyone, as you know, I'm the Gen Z investor, and before we get into Pfizer, I post videos on this channel every single day that talk about different stocks you can buy, overall stock market performance, and any other big stock market news and headlines, and any other overall news we have to talk about from the market. So please like and subscribe, and we're going to get right back into Pfizer. So Pfizer's ticker symbol is PFE, currently at $37 a share, and on the 1-year chart, they actually are down 12% right now. So if we take a look at the 52-week range, they're trading somewhat near the middle, a little bit on the high side, 52-week low at around $28, and the 52-week high around $43. So once again, with regard to the full 52-week range, they're not near the high side, again, which might indicate a little bit of a buying opportunity right now. If we move over to the 5-year chart, only around a 10% price appreciation over the past 5 years. So not a lot of growth with regard to share price, an average of like 2% per year over the past 5 years with regard to share appreciation. And you can see here the company has been around $30 to $35 nicely in that 5-year range. With this company though, you're getting to a massive company around $209 billion market cap. And this is actually a very big dividend payer with a 4% yield right now. So you can see here there's very little price growth, but you are getting a big yield at around 4%. And they have a forward PE at around 1330. So once again, what you normally see with a lot of big dividend payers with lower PEs, it's not like a big tech giant that has a very high PE ratio. And we're going to jump right into it. And before we talk about the actual analyst expectations for the company and what we believe we can see moving forward, we're going to just talk about the dividend. As dividend growth investors, we love companies who pay nice growing dividends. So let's see what Pfizer does. So we move over to their dividend scorecard. You can see here that nice yield at around just slightly over 4% at 4.04% right now. Annual payout per share of $1.52. Very sustainable 53.7% payout ratio. So that payout ratio around 54% means they have a lot of money to reinvest back into the business to completely redevelop vaccines, grow the business overall, and research and develop new products. And they still have enough room to continue to pay out that dividend, and not only pay it out, but actually grow it each and every year. And they have a 5-year dividend growth average rate of around 6.72%. So they're actually growing that dividend at a significant rate. If you buy into Pfizer and you start off with that nice 4% yield, with that 6 to 7% average annual growth in the dividend, your compounding effect is going to work very nicely for you. And they've actually been growing that dividend for 10 straight years. So not the longest dividend growth history, but of course they actually have shown that for the last 10 years, they can sustainably grow the dividend each and every year. And with regard to how safe that dividend is, I always like to keep that in mind. It is ranked at 75 from Simply Safe Dividends, so which is a very solid number. I like to make sure all my dividends are considered safe at least before investing, and Pfizer has just that with a ranking of 75. And one thing to point out with this stock is they have a beta at around 0.72, so they're actually not that very volatile. They have low volatility, which means with a lot of the tech stocks out there and a lot of the high-risk stocks on the market right now, their share prices fluctuate insanely, and there's a lot of volatility. So if you want to kind of slow down that volatility within your personal portfolio, and you want to hold stocks that have a little bit of a lower beta, Pfizer might be the one for you, and you can collect that nice 4% dividend that is considered safe. So that's just one perspective to keep in mind, and they do have a low beta right now, which is nice to see. So we're going to jump in now to a couple different analyst expectations for the company. We're going to think what analysts are actually saying. Let's see if the first one is from Morningstar. And you can see here it's rated 4 stars, which actually shows that this company is a little bit undervalued right now. Morningstar shows a fair value for the share at around $41. Meanwhile, it's trading around $37.66 right now. So it actually shows that it is slightly undervalued. Of course, it's not a major undervalue. It's undervalued maybe by 10% right now. It's not one of those stocks that you're getting for a 50% discount. But like the great Warren Buffett has always said, it's much better to buy a great company at a fair price than a fair company at a great price. So Pfizer, if you believe in the company long term, it's a massive company with over $200 billion market cap, a growing dividend over the past 10 years with a nice 4% yield, and they have potential to see huge growth over the next 6 to 12 months if they're able to come out with a vaccine, which might see huge net income potential. So if you can buy in where it's considered maybe a little bit slightly undervalued right now, it might be a nice deal. You can see here it's actually trading at a 6% discount from their fair value. And we're going to take a look at more than one analyst because you can't just focus solely on one item. So if we move over to the next analyst, you can see here they're showing 12-month price target for Pfizer at around $40 a share, shows a 6% upside. It's a moderate buy. So no one's selling Pfizer right now. Investors are holding and they're actually buying. So different analysts show that they believe in the next 12 months the share price will be around $40. The optimistic analysts may see it at 55, and the pessimistic or the bears toward Pfizer see it at a low of 22. But the average overall shows it around $40, which is around 6% upside from where it is today. The final analyst expectation we're going to take a look at shows very similar aspect. You see here the average of $40 a share, an optimistic view at around a high of $53 a share, and a pessimistic view at around $35 a share. So one that I like to see is, even with 14 different analysts compared to the other two, they all show an average price target for Pfizer higher than where it is today, with about a 6 to 10 potential upside. They show that the fair value of the company is a little bit higher than where it is today. And what they believe is that, on average, they believe 12 months from now, the share is going to be worth more than it is. You can collect that next 4% dividend yield over that next 12 months. And what I like to see is that even the pessimistic view of $35 a share, it's currently trading at $37 a share. So even the pessimistic view for Pfizer is not showing a lot of downward motion. Overall, they believe the company is either going to continue to stay flat like it's been doing over the past 5 years, or show a little bit of upward movement over the next 12 months. And this, of course, is all up in the air with regard to if they are first to come with a vaccine. I'm sure we might see a nice surge in share price where the price may jump faster than these analysts are estimating. Or maybe if they are first to market with their vaccine does work the best, they may be the one that hit the optimistic price target around $45, $53 a share. So we'll only have to wait and see. But just to see that different analysts from different markets, different businesses, different companies, all showing that Pfizer may be a little bit undervalued right now. There might be a nice little upward trend over the next 12 months. Make sure that this may be a nice buying opportunity for Pfizer right now. If you are a dividend growth investor who likes having a 4% yield in their portfolio, Pfizer might be a company you want to take a look at, especially with the potential to be seeing nice net income growth with all the big news and what they're working towards. Last thing we're going to do with Pfizer is take a look at their financial statements. We're just going to go over the income statement and the balance sheet just to see how this company's been trending over the past 5 years. If we take a look at total revenue, you can see this chart, not the best chart, but nothing too worrying. So total revenue of the past 5 years is on a slight upward trend or flat. I would call this flat. You can see here 5 years ago, total revenue was around 48 billion. Meanwhile, you can see now total revenue over the past 12 months is 50 billion, so slight upward trend. The 12 months, of course, we've seen an economic shutdown, so that's why this has dipped a little bit, but it's very slight upward trend, but overall flat total revenue. If we take a look at net income over the past 5 years, once again, similar story. Slightly upward trend, but overall, I would say over the past couple years, it's considered somewhat flat. Once again, if we take a look at the chart, you see upward trend overall, but recently a little bit flat. So that's not the best. We like to see companies who are growing revenue somewhat fast year over year. But of course, with a big dividend payer who's like more of a cash cow company like Pfizer, nothing too worrying. We're not expecting double-digit revenue growth quarter over quarter with Pfizer. We're expecting slow, consistent growth. So they have been flat a little bit over the last couple of years. Hopefully with this new news of what they're working on, their different vaccines, maybe that can bump that up and reach a little bit more significant growth over the next couple of quarters and the next couple of years. Taking a look at their balance sheet, they are okay right now, but their balance sheet could be improved. If you take a look, they have total current assets of around $34.7 billion. Meanwhile, their total current liabilities are around $33.8 billion. So their current ratio is barely above 1. With companies, like the bare minimum we like to see is a current ratio of 1. So of course they are meeting that criteria, but it could be improved. Solid, beautiful, healthy companies like seeing that current ratio around 1.5 or higher, just because that gives them enough buffer to pay off those short-term liabilities and still have enough assets maintained overall to operate the business. So even with the current ratio around 1 right now, they are okay for the next 12 months, but they might have a tough time paying off those liabilities. They may have to generate a little bit extra cash over the next short term. Meanwhile, total assets of $166 billion. Meanwhile, total liabilities are around $100 billion. So once again, more assets than liabilities, which is a good thing to see. They are positive in equity. Total equity over the past couple of years has been similar to the trend with Pfizer, where it's somewhat flat year over year. Total assets over the past 5 years is similar trend. Once again, very flat. Pfizer hasn't been doing any huge things over the past 5 years. They are kind of staying the same size and growing at a very slow rate, which of course was represented in the share price, which has only seen a 10% change over a 5-year span. So again, with this type of company, you're kind of looking for the dividend here. You're buying in right now if you like the company for the potential of their news that they could come out with a vaccine first, and which may lead to huge income and revenue growth over the next couple of years and long into the future. So those are my thoughts on Pfizer. We did a quick analysis. They're in the news a lot lately for their vaccine potential. We have seen that beautiful 4% dividend that they've been growing for the past 10 years. We look at what analysts were expecting, which I see a little bit of an upward trend and showing that Pfizer may be slightly undervalued right now. And when we took a look at their financial statements, we saw that their financial statements aren't the best, but they're not terrible. We like to see them improve revenue and income over the next couple of years. And we would like to see them bump up that balance sheet, get that current ratio up a little bit better. So overall, that was our analysis on Pfizer. Let me know in the comments if you're going to be purchasing Pfizer. And if you are, let me know your thoughts. Leave a comment down there saying why you're going to believe, if you believe Pfizer will be the first one to come out, if you believe their vaccine has the potential to be the market leader. Let me know down below, and I will see you in tomorrow's video.